Every trader in this room has the right strategy. Most of you have the right broker. Some of you even have the right setup. And yet, you're still losing. So let me ask you something uncomfortable. What if the problem has never been your system, but the person running it? You came here today thinking I'm going to hand you a new indicator, a smarter entry, maybe a tighter stop-loss formula. I'm not. And if I did, if I gave you exactly what you think you need, it wouldn't change a single thing about your trading next week. I promise you that. Here's what I've learned after 2 decades in the markets, after speaking to tens of thousands of traders, after watching brilliant people blow up accounts with brilliant strategies. The chart is never the problem. You are, not as an insult. As a fact, the market doesn't care about your logic. It doesn't reward your research. It punishes something far more personal. It punishes how you think, how you feel when you're down 200 points, how you behave when you're up 400 and suddenly terrified of giving it back. Most traders spend 5 years trying to find the perfect strategy. The successful ones spend 5 years learning to get out of their own way. That is the shift. That is the only shift. And today, I'm going to show you exactly what it looks like. And more importantly, why most of you will hear it, nod your head, and still walk out the door and do nothing about it. Let's begin. You are not losing because of your strategy. You are losing because of yourself. You came here with your charts, your setups, your carefully back-tested systems, and I'm telling you, none of that is the reason you're failing. That's a hard pill to swallow. Swallow it anyway. I have spoken to thousands of traders over my career, novices, professionals, people who've read every book, attended every seminar, subscribed to every signal service available. And the pattern is always the same. They know what to do. They just don't do it. Or worse, they do the exact opposite at the exact wrong moment. Sound familiar? Here's what nobody tells you when you start trading. The market is not your opponent. Your opponent sits in the chair you're sitting in right now. It is the version of you that panics when the position goes against you by 30 points. It is the version of you that moves the stop loss just this once because surely the market will turn around. It is the version of you that cuts the winning trade too early because you're terrified of watching the profit disappear. That person, that is who is destroying your account. The strategy works. I've seen mediocre strategies make people rich. I've seen world-class strategies bankrupt people who couldn't follow them. The difference was never the strategy. The difference was always the human being executing it. Think about what actually happens when you sit down to trade. The moment real money is on the line, something changes inside you. Your heart rate shifts. Your thinking narrows. You start making decisions based on how you feel rather than what you planned. Fear, hope, greed, ego, they all walk into the room with you and quietly take over. You don't notice it happening. That's what makes it so dangerous. I lost my trading account early in my career. Not because I didn't understand the markets. I understood them reasonably well. I lost it because I understood myself very poorly. I didn't know how I would behave under pressure. I didn't know that my rational mind would completely abandon me the moment a trade moved against me by a meaningful amount. I had to learn that the hard way. Most traders do. The shift I'm talking about today is not about adding another tool to your arsenal. It's about removing something. Removing the emotional interference that sits between your plan and your execution. Between what you know and what you actually do. Until you close that gap, no strategy on earth will save you. Not mine. Not anyone's. The problem is you. And that, paradoxically, is the best news you've ever received. Because you can change. The market doesn't punish stupidity. It punishes emotion. You assume the losers are the ones who don't understand technical analysis, the ones who can't read a chart, the ones who never studied risk management. And yes, some of them are. But the majority, the vast, overwhelming majority of people bleeding money in the markets every single day are not stupid people. They are emotional people. I have watched highly educated individuals, people with economics degrees and finance backgrounds, destroy their accounts in spectacular fashion. I have watched people who could explain Elliott wave theory in their sleep make the most irrational trading decisions imaginable the moment real money was involved. Intelligence did not protect them. Knowledge did not protect them. Their emotions ate them alive. Here's what the market actually is. It is a mechanism. It has no opinion of you. It does not know your name, your education, your income, or how many hours you spent studying last night. It simply moves. And every time it moves, it triggers something inside you. Fear, excitement, panic, greed, and that internal trigger is where the real damage is done, not in the price action. Inside you. Think about the last trade you regret. I'd be willing to bet it wasn't a knowledge failure. You probably knew somewhere in the back of your mind that what you were doing was wrong. You knew the stop was in the wrong place. You knew you were chasing the market. You knew you were holding on too long. You knew. And you did it anyway. That is not a stupidity problem. That is an emotion problem. The market has a ruthless and almost elegant way of finding your weakness. If you are afraid, it will move just far enough against you to trigger that fear and shake you out right before reversing in your original direction. If you are greedy, it will give you just enough profit to make you hold on longer than you should and then take it all back. It is not personal. It is mechanical. But your response to it is deeply, dangerously personal. This is why two traders can look at the same chart, agree on the same setup, enter at the same price, and walk away with completely different results. The trade was identical. The emotional response was not. Controlling your emotion is not a soft skill. It is the hardest and most important skill in trading. Smarter will not save you. Calmer will. The market rewards composure. It always has. It always will. And composure has nothing to do with how much you know. It has everything to do with how much you've learned to feel nothing when everything inside you is screaming. Winning traders don't think more. They feel less. More research. More data. More screen time. The assumption is that the trader who thinks hardest, who studies longest, who runs the most complex models, will ultimately come out on top. I am here to tell you that assumption is not just wrong, it is actively destroying your performance. I have watched traders paralyze themselves with intelligence. They see a setup, a clean, obvious textbook setup, and instead of executing, they start thinking. They pull up another indicator to confirm. They check the economic calendar one more time. They read 3 more opinions on what the market might do, and by the time their overworked brain has finished its analysis, the move is gone. Or worse, they enter so late and so hesitantly that the inevitable small pullback shakes them straight out of a trade that went on to deliver hundreds of points. Overthinking is not caution. Overthinking is fear wearing an intelligent disguise. The traders I have observed who perform at the highest level share one striking characteristic. They are remarkably quiet inside, not because they are simple people. Quite the opposite. They have done the thinking already. Before the market opened, before the week began, they have a plan, they trust the plan, and when the moment arrives, they act on it without internal negotiation. The thinking happened in advance. The execution is almost mechanical. What separates them from everyone else is not superior intelligence. It is the absence of emotional noise at the moment of decision. They have trained themselves through hundreds and thousands of repetitions to feel less when the trigger arrives. No surge of excitement, no wave of doubt, just execution. Consider what happens inside an average trader the moment they see a setup forming. The heart rate rises. Internal voices compete. What if this is a fake out? What if I'm wrong? What if I should wait for one more confirmation? That internal noise is not wisdom. It is emotion dressed up as analysis. And it costs you every single time. The goal is not to become a robot. The goal is to become so thoroughly prepared, so deeply familiar with your own plan, that the emotional volume drops dramatically at the moment it matters most. You want clarity where others have chaos? Stillness where others have panic. This takes time. It takes repetition. It takes the willingness to sit with discomfort and not react to it. Most traders never get there because they keep searching for a better strategy when what they actually need is a quieter mind. Think less in the moment. Feel less in the moment. That is not weakness. That is the highest form of trading discipline there is. And it will change everything. Your need to be right is costing you everything, because that is exactly what it is. The need to be right is not a trading habit. It is a deeply human trait that you have carried with you your entire life, and you have brought it into an arena that will punish it without mercy, without exception, and without apology. From the moment we enter school, we are conditioned to value being right. Right answers get rewarded. Wrong answers get penalized. Decades of that conditioning build something powerful inside you, an identity wrapped around correctness. Being wrong feels like failure. Being wrong feels like weakness. Being wrong feels like something to be avoided at almost any cost. And that psychological wiring, so useful in classrooms and boardrooms, becomes catastrophic the moment you sit down in front of a trading screen. Here is the brutal reality of trading. You will be wrong constantly, not occasionally, constantly. The best traders in the world are wrong nearly half the time. Some of the most profitable trading systems ever built lose on more trades than they win. The entire architecture of successful trading is constructed around the acceptance of being wrong frequently, managing those wrong moments cheaply, and allowing the right moments to run fully. That is the whole game. And if your ego cannot tolerate being wrong, you will never play that game effectively. Watch what happens when a trader who needs to be right gets into a losing position. They don't cut it. They can't. Cutting it means admitting they were wrong, and that admission feels unbearable. So they wait. They add to the position. They create elaborate justifications for why the market will eventually come back to them. They turn a 20-point loss into a 200-point loss, not because they are stupid, but because being right matters more to them than being profitable. I have seen it 1,000 times. The trade becomes personal. The market becomes an argument they refuse to lose. The shift you need to make is profound and deeply uncomfortable. You need to completely detach your self-worth from the outcome of any individual trade. A losing trade does not make you a loser. A wrong call does not make you incompetent. It makes you a trader. Because traders are wrong all the time. The question is never whether you will be wrong. The question is how much it costs you when you are. The traders who last, who compound, who build real wealth over time are not the ones who are right the most. They are the ones who are wrong the cheapest. They have killed the ego. They have made peace with being wrong, and that peace, that quiet surrender of needing to be right, is worth more than any strategy you will ever find. Give up being right. Start being profitable. They are rarely the same thing. Discipline isn't something you have. It's something you build trade by trade. Discipline is a construction. It is built slowly, deliberately, repetitively, through hundreds of small decisions made correctly under pressure. And the reason most traders never develop it is because they are waiting for it to arrive rather than understanding they have to build it themselves. I hear it constantly. I know what I should do, I just lack the discipline to do it. That sentence sounds like self-awareness. It is actually an excuse. A comfortable story that explains failure without demanding change. Because the moment you accept that discipline is something you either have or don't have, you remove all personal responsibility for developing it. You become a passive participant in your own development. And passive participants do not survive in the markets. Here is what discipline actually looks like in practice. It is not a grand heroic moment where you summon enormous willpower and override your emotions. It is far smaller than that. It is following your entry rule today, even though the setup feels slightly off. It is respecting your stop loss this afternoon, even though everything in you wants to move it. It is closing your platform after your maximum daily loss has been hit, even though you are absolutely convinced you can win it back before the session ends. Small decisions. Repeated daily. That is discipline. That is how it is built. The problem is that every time you override your rules, even once, even with good reason, even when it works out profitably, you are not just making one bad decision. You are actively dismantling something you have been trying to construct. You are teaching yourself that the rules are negotiable. And a negotiable rule is not a rule at all. It is a suggestion, and suggestions do not protect you when the market turns savage and your emotions take the wheel. Think of it like physical training. Nobody walks into a gym on the first day and lifts the heaviest weight in the room. You build strength incrementally, consistently over time. You show up when you don't feel like it. You do the repetitions even when they feel pointless. And slowly, almost invisibly, something changes. You become capable of things that were previously impossible. Trading discipline works in exactly the same way. You don't find it. You forge it. Start with one rule. Just one. Follow it without exception for 30 trades. Not 29, 30. Feel what it means to commit completely to something regardless of outcome. Feel the discomfort of following a rule when every instinct tells you to break it. Sit in that discomfort and don't move. That feeling, that quiet resistance followed by deliberate, correct action is discipline being born. One trade at a time, every single day. There is no other way. The best loser in the room will always outlast the smartest trader, as a fundamental truth about what this game actually rewards. Because everything you have been taught about success, in school, in business, in life, has told you that the smartest person wins. Work harder. No more. Be better. And in most fields, that is reasonable advice. In trading, it will ruin you. The markets are not a test of intelligence. I cannot stress this enough. I have known brilliant people who lasted 18 months before their accounts were gone. I have known people of very ordinary analytical ability who have traded profitably for decades. The difference was never intellectual firepower. The difference was always how each person handled being wrong, how they handled losing, how quickly they accepted a bad trade for what it was, closed it without drama, and moved to the next one with a completely clean slate. The smart trader holds on. He has built a detailed, logical, well-researched case for why the market should move in his direction. And when it doesn't, he defends that case. He argues with the price. He adds to a losing position because his analysis tells him he is right and the market is temporarily wrong. He is intelligent enough to construct a convincing internal argument for why he should keep holding. And that intelligence, that very sophistication that he believes is his edge, becomes the instrument of his destruction. The best loser operates differently. When the trade goes against him, he does not consult his analysis. He does not rebuild his case. He simply acknowledges that the market has told him something, and he listens. He takes the loss. It is small because he planned for it to be small. He feels nothing dramatic about it because he planned for it to happen. He understood from the beginning that losses are not exceptions in trading. They are ingredients. You cannot make the dish without them. This is the great paradox at the heart of everything I teach. The path to winning in trading runs directly through becoming exceptionally good at losing, not recklessly, not carelessly, but cleanly, quickly, and without emotional residue. Every loss closed properly is capital preserved for the next opportunity. Every loss held too long out of pride or hope or stubbornness is a wound that compounds. Your survival in this game is not determined by how spectacular your winning trades are. It is determined by how small and how clean your losing trades are. Anyone can write a winner. The skill, the real skill, is in what you do in the first 30 seconds after the market tells you that you are wrong. Lose well, lose quickly, lose without ego. Do that consistently, and you will still be trading when the smartest person you know has long since quit and gone back to a salaried job wondering what went wrong.